Well, hi everybody, Adam Collingwood again here, and welcome back to the Financial Traders Cafe, where I continue to train, educate as much as I possibly can about financial trading, just sharing all my experiences over the many years that I've been trading as a professional trader and an investment manager. Now, one of the things that happens often is the markets get into overbought territory. And as a consequence of the stimulus from central governments such as the Fed and the ECB, etc., these stimulus programs have injected a lot of money back into markets, so they've printed a lot of money. And consequently, markets have been pushed up considerably. Now, we get to overbought levels where, unfortunately, when the market is in full flow, it will just keep running and running and running, which is great if we're actually buying. But then, once those breakouts happen, the brakes will be put on at some point. So what we want to do is look at reversals. And what I'm going to demonstrate to you in this training session is something that happened yesterday, where Wall Street hit a major level of monthly resistance. And it did actually go past that level a little bit, as it sometimes does, before it started to pull back again. Now, I like trading the German DAX. It's a wonderful market to trade, and it's quite predictable. We have all the support resistance lines, trend lines, and the right indicators set up. So you'll always see on my chart that I keep things as simple as possible, but that doesn't mean that we aren't accurate in terms of the trade alerts that are being sent out, because what we're doing is we're trying to keep things as uncomplicated as possible, because you can suffer from technical analysis paralysis with so many indicators on your chart that it can lead to conflicting signals. Whereas if you're looking where price is heading towards and then where it's starting to put the brakes on, it's then about how you're getting those right entry points, how long you're going to be leaving those winners open for, and then where those target points are. So I'm just going to demonstrate to you in this training something that happened yesterday, and so that will then make things very clear for you. So let's go into that now. I should just share my screen with you. So we will go and look at the German DAX. Okay, so what you're looking at here is a 1 minute chart, and I'll show you another chart shortly, which I posted to my Ultimate Trading membership group, and then that will show where that overbought level was, and also that major level of resistance on Wall Street. Okay, so what we did yesterday is we had a signal to enter, okay, on the system that I created, which was to sell there. Okay, now the time of that yesterday was something like about 13:38. Okay, so as the price actually crossed through, so that was the 1 minute candle there, as it crossed through the black line here, that's where we sold the DAX. But you can also see on here, see this line here, okay? So this is the major weekly level of resistance. So this line here is just so important, okay? So it hit this level, it did go through it a little bit earlier, so that was all the way up there, and I was waiting for it to start to cross back down again with an entry there. Now, the reason why we can't enter at the top is we don't know how much further it's got to go. So we have to wait, be disciplined, just in case it's got a little bit further momentum on its swing up before we're then able to press the sell button. So that was around about 12.87172, something like that. But what I'm going to do now is I'm going to go and show you the alert that was sent to the membership group. So let's just clear those drawings. So this was yesterday. So that was the sell DAX 1339 that was sent to the Ultimate Trading Membership Group. And you can see here, that was where it was, 1339. So you can see that was when I sent that alert out with a stop as well. Okay. So what I also put in the message to the group is this is a chart of Wall Street at a major level of resistance, which was 27,359. So let's have a look at that. That was Wall Street yesterday. So 27,359. And that was a major point here. Okay. A major point that, that the Wall Street had hit. And that was an indicator that something had to stop this in its tracks, and that's why that resistance line is on my chart. So you can see my trend lines there as well. That's another major level of support, and another one down here. So these are all on here. Very, very important that they're there so that I can see where price potentially is going to stop in its tracks. So that lovely upswing on Wall Street, and then it's just stopping there. But sometimes, like a spinning top, it can continue to go a little bit further. Okay. So that's what I put in there. This is going to be hard to sustain these levels, which is why we are due a correction, a pullback. All sell entries will be through the micro time frames to keep the risk small. So may require sub entries to protect against upward moves, just in case there was a little bit more momentum. So what we're after here is as much reward, as big a reward as possible for a small amount of risk. And I'm just going to go into risk reward ratios. I mean, I like small risks for big rewards, not risking any more than, preferably no more than 2% of a trading account is maximum, but I like risks of, you know, up to 0.5% of a trading account with rewards of 2 to 3%. Okay, so we're looking sometimes at 3 to 1 to 5 to 1 reward for risk, and sometimes even much, much higher than that. Okay, but look what I also say here. All signatures will be through there. However, the end game will be a pullback on the DAX to 12,500 territory, and further creating a big reward for small risk trades. Okay, this was the relative strength index on the DAX. So for those of you who are seasoned traders, you will know all about the relative strength index and the importance of this. Now, it was already above this level, which is above 70 on a daily chart, but this is the overbought level on a 1 hour chart. Okay, so the 1 hour chart, sorry, this was a daily one, but there was also a 1 hour chart, okay, which was just showing overbought levels. So I did actually have two of those that that I printed off yesterday, but this is the one that I posted on the daily. Okay, overbought level very high, but the 1 hour was in the same situation. It just been overbought. Okay, and when it's as high as this, if you go back, you look back in November, and then of course the big sell-off in March. Okay, eventually it has to start to come back up again, and then it will put the brakes on, and that's what it did yesterday. Okay, so these are all good signals here. So now what we want to do is go back and just see what happened. So we were selling, let's go back to the chart again. So this was up here, we sold at 12,878. Okay, so cross through. And then what I'm going to do is I'm going to show you what happened. So this was yesterday, Monday, the 8th of June, and that was the time that I sent the alert out. Okay, Now the stop, just to show you on here, was up here. Okay, so the highest candle on the 1 minute in that cycle. Okay, so just here. Okay, that candle there. Okay, so entry, stop, and so the stop there was at 12.918. Okay, with an entry there. So we're talking it was a 36-point stop, 36 pips of risk. Okay, I was looking for this to drop to 12,500. So we're talking 378-point move. Now, it did drop by 140 pips. It rallied again, and then it continued to drop further. So let's have a look and see from here. Okay, so let's move on. We'll have a quick look at now the 5-minute chart. Okay, let's just change the number of units to just 200. So let's have a look here at what did happen. So this was 7 o'clock this morning, which is Tuesday today, 9th of June, and this is the drop. Okay, so the price dropped and dropped and dropped and dropped and dropped all the way down to 12,500. Well, 12, what's the low of that candle there? There you go, 12,499. Okay, so I said drop 12,500 territory. That's what we're actually looking for. Okay, so if we look at this in terms of reward for risk, and you're selling, you know, even when the alert was sent out, even if you sold it, you know, 12,870. So 12,870 minus 12,500, you know, you're looking there at a nice 370 reward for 36 pips of risk. Okay, so we're talking there 10 to 1. But even if you close a trade at 180 pips, okay, 36 pips risk, then you still got a 5 to 1 return. But, you know, I'm sure as a trader, you would love to be able to get a trade where you're only risking just 36 pips to get that kind of reward. So if you'd taken that, you'd have then been in for a 10 to 1 return. Okay, so let's have a look at some trade sizes, because I like looking at trade sizes depending on the size of your account, and it's something that I talk about a lot. So what I'm always saying is no more than 2% on any one trade. Okay, so maximum of 2% of trading account. Okay, so let's have a look at some of the trading account sizes. So if you had a £2,000 trading account, so let's just say you were just starting out as a trader and you put £2,000 in there. Now, what we want to do is get you to scale up to as much as possible. We want to build the 2 to 4,000, 6,000, 12,000 and so on. So we're compounding the trading account up. So that's whilst protecting the capital. So what you don't want to do is go for these big sized trades. Well, in some cases, you know, the margin requirements might not allow you to trade more than £2 or £3 a point anyway, which is good because it is actually protecting you. But let's just say you've got this £2,000 trading account, and you can therefore on this particular trade 36-point risk. So that means the maximum you can risk on here is only £40. If you've got a 2% of 2,000 is £40. So that means that you'd be trading at £1 per point. That's so £36 risk. Okay, for potentially, let's just say you took it a little bit earlier, you didn't wait for it to get to 12,500. Let's just say that you took £300 on it. Okay, so on that basis, is it worth spending £36 to potentially get £300 return? Because you know that the price has hit a major level of resistance, you know where to enter because you've learned where to enter, where to put your stop, and where those target points are. So £36 to make £300. So it's worth it on a £2 on a £2,000 trading account to make £300. You can see how quickly you can build up your trading account with small trade sizes. Small hinges swing big doors. So if you look at those great big safes, the great big vaults, you know, they've only got very small hinges, but they swing those great big doors. And that's what it's like, you know, with trading small amounts to get big gains. Okay. So that's on that size trading account. But what if you decided that you, you had a, so you built up to say a £6,000 trading account equals, okay, 2% of the trading account. So £6,000 trading account equals £120 risk. Okay. So at £36, okay, risk on £1 per point. That means here, if you're going up to 2%, you could say here risk £3 per point. Okay, so £3 per point. That would mean that so 3 times 36, 96, 102, £108. Okay, risk there. But the reward, if you took it at just even 300 pips of profit, then of course, you know, you're looking at a much bigger return because you're going to be getting £900 back for that. So 900 for £108 risk. Okay, would that be worth doing? £108 for £900 reward. Okay, that's how you can build up that £6,000 trading account very quickly. Now, finally, if we looked at a £10,000 trading account, so the maximum 2% means that you can risk no more than £200. So max risk, okay, is £200 there. All right. Now, on this particular trade, you might say, well, again, £36. So at 36 pips of risk, you could, if you wanted to, trade at £5 per point because you'd have enough margin in your account on a £10,000 account to be able to trade at £5 per point here. So you're risking £200 though. Okay, well, not quite here. In this case, it'd be 5 times 36. So you've got £180 of risk. But if you got stopped out, that's what you would lose. Okay, but if you had traded £5 per point and you did take the 300 pips, and bearing in mind it actually dropped more than 300 pips at 12,500, your reward there would be, of course, the grand total of £1,500. Okay, and that is at 300 pips. Okay, so just to recap, maximum of 2% of your trading account always. So if you've got £2,000, don't trade any more than 2% of that. So maximum you could risk there was £40. Okay, so £1 per point, £36 of risk, but for a 300 pip return, that's £300. 6,000 trading account, maximum risk, 2% of 6,000 is £120. Okay, so you could, if you wanted to, risk £3 per point, £108 risk, but the reward here was 3 times 300 pips, £900. And then the final one we would look at here is 10,000, much bigger trading account, no more risk than £200, but at £5 per point, okay, the risk was £180, but reward £1,500. So for 36, we're talking a 10-to-1 risk reward ratio there. Okay, and the reason that we were able to get such a big reward here is simply because of the fact that we knew that the DAX had been overbought, Wall Street had been overbought, we were due a correction. As I said, if we go back to, if I go back to my Ultimate Trading Membership Group, so I'm just going to clear those drawings now. So you go back to that, that's exactly what I said here, demonstrated why I felt that these were at overbought levels, very clear to see. Okay, where the stop was, and I did mention earlier as well, prior to that alert, Wall Street has now hit the major monthly of boosted by the Fed injecting trillions into the US economy. This has pulled the DAX up along with it, with the EU's own stimulus program. I expect to see the markets contracting. Price action is everything, so the reversal entry on the DAX will be as the price crosses through our secret weapon, which is on the micro time frames. Look for my sell alert. That was at 13.29 there. Okay, and then at 13.39 I sent the signal out to sell the DAX. These are all the other alerts that I send out, so you can see there's lots of them. I send out regularly when the DAX is falling. So I'm not only am I sending alerts out, but I'm also giving training as well as to why certain things happen, why I was actually selling or buying. So again, you're looking at an RSI chart. This is a 10-minute chart. First target of 10.3 is now in sight again. DAX was cheeky before getting to 10.384 before dropping again to 10.300, which is why an entry is so important, giving us plenty of room for the price to move whilst taking a small risk. And here we are, first target of 10.387 now hit for 102 pips. If you want to leave the trade open longer, 10.432 is the next target. Beyond that, DAX could rally to 10.556 overnight or tomorrow. So I'm always giving a running commentary there, so you can see this is the chart and why we would take profit at 10.387, so that major level of resistance. So we were buying the DAX in this particular case. And yeah, so it's always with the with my Ultimate Trading Membership Group, it's not just the alerts, as I said, it is always explaining what's happening and why we are selling or buying. I mean, here's another one that I sent out. So let's have a look here. Sell DAX 11.31. So DAX has rallied after this morning after the falls late last night. It's tested the 15-minute and 13-minute super trend flipper strategy and resisted so far. So that's the flipper strategy I was using. The DAX hit pivot at 10.692. Loss should be 10.704 stop loss. Okay, so it's important to know where that stop loss should be. DAX does break through the 15-30 through pivot, it is likely to test 10.751. Okay, all about small risk, as I keep saying, for big reward. Hope that all makes sense. First target point is 10.629 and 10.597. And then of course I'm doing another chart there so you can see what's going on. There's a doji there as well, where the moving averages are. Okay, so all of that's very important, part of the training. So there we are. Okay, first target has been hit, but the market is still volatile. The top there at 10.700. Okay, so 10.597 has been hit for 73 pips profit. And now it needs to accelerate through 10.579. Okay, so see what's happening. I'm constantly just giving updates on this. Okay, and by the time we got here, 10.587 has been hit. At 4:50 in the afternoon, boom, 10.492 has been hit. Okay, so in that particular case, that was 168 pips profit by DAX again. So you can see the power of sending alerts out when certain things happen, and then supporting that with so it's the before and then showing the after. Okay. So let's have a look at see what the DAX is doing at the moment. So you see that big move. So that was a lovely result for us today at 12,500. And And, you know, it's meandering around at the moment. So we've had that sell off. There'll be a few more opportunities as well. But as many of you know, if you're seasoned traders, for you new to trading, then the most important thing is, I'm going to just stop sharing the screen now. The most important thing is just to be patient, you know, really patient, wait for a price to come towards you, not jump in too quickly. There's a lot of psychology to trading, and that is something, probably 80% psychology, 20% mechanics, knowing not to rush in, be patient, wait for something to happen, know exactly where those entry points should be, where to get out quickly, where your stop is, and then of course where you should be taking the profits at. But it's those small risk trades for the big rewards. That's where it counts most with trading. And it's the most amazing thing, trading. It's the best thing in the world, the easiest thing. If you aren't, especially with lockdown at the moment, with people still furloughed, if you're in the UK, people, you know, try and find things to do, new things to learn. Well, this is the best thing as far as I'm concerned, to learn how to either day trade or to, because I do actually end of day trade. I love trading individual stocks. So I like stocks that are really trending nicely. And that's for another training session, showing how to find those stocks, how to buy them, and getting in at the right time. So not buying when they go up too much, wait for that pullback to happen, try and get more value, and then get in at the right time. Anyway, I hope you found this training very useful. Please let me know if you did, and always welcome any comments, and just look out for more training, and happy trading. Take care, and I will speak to you again soon.